Hello everyone, welcome to another weekly market review. Today is the 29th of June 2020. Both cryptocurrencies and the traditional markets are at a critical support. Will it hold or will it not? Let's find out. We're close to the end of the quarter, so going to look at the quarterly charts as well. First of all, total market cap, that's not a bad looking quarter. Of course, we have a big resistance coming up where we already have got a couple of strong rejections. Just quickly want to draw a fib. Yep. So there's nice confluence here around the 300 billion level on the quarterly time frame. So essentially that is the big level. I think once prices and price ends up finding support here. If you look at it from a higher time frame perspective, so we had the big move, we got the first correction and we got the second correction, so this was a truncated correction, and essentially we have now got the first impulse out of it. It's not a bad looking quarter by any means, but of course we are still very much under major resistance, and until this is taken out, we can range here for forever, guys. So until this is taken out and we find support here, a raging bull market that everybody is looking for and imagining, you should try to stay balanced and try to calm yourself and stay out of that picture until price really does form support here. On the monthly, so we had a nice bullish engulfing in April, and May was not so bad either. We got a continuation where we broke up over this monthly level. So what have we done in June? It's basically been a consolidation phase until it's proven otherwise. I would say that if we start breaking some key levels, we can negate that this is consolidation and assert that this has been a distribution, wherein we would start looking at lower levels. But for now, this is 2 strong months and another month where we have yet to, there's still 2 days, so keep a lookout for this monthly close. I'd say if we close below this 251, this 250 level is also the monthly pivot, so if we close below this 251 level, I'd say that there is more potential for this to test the lower levels and bears are stronger. Let's go to the weekly now. So on the weekly, when we've had 3 weeks of essentially what is a slow decline, and if you look at the volume on BTC, it has been on declining volume, this drop, and for now that is the only reason that I am not overly bearish, because the volume has been lower as we have been coming down. We have held the key support levels. This 242 245 is the key support level. This is what I want to see breaking to really think that this is distribution, guys. I've been talking about this level since a long time. The logic behind it is where we have found long-term support, so you don't want to see closes below this, and if that is so, then we could start classifying this as distribution, start looking at 225 and possibly then even 200 or 180. But for now, we cannot, unless this level breaks, we cannot be thinking of that. All price is doing is correcting with declining volume, which means it is still okay to be managing risk, at key levels for a potential upside. But what I want to say is a lot of metrics are still against that. Let's go on to the daily. What is against it is momentum. What is for it is sentiment. So you have to think about that. But yeah, this is basically the VWAP we've been looking at since the last couple of weeks. So we got a test for it and basically got a decent reaction. Nothing is proven yet. On the daily time frame, you can see that there was this big support level, this 257 daily support level, which held price basically for 2 or 3 weeks, and we ended up closing below it. We have come down now we are trading below it, so I would say that if you are bullish and you want to start looking for upside, first of all, this level needs to turn into support. And yesterday all we did is tested it as a resistance. It was a decent place to be managing risk for some downside, and you can see we have got quite a decent reaction, couple of percent from there. So I would say that if you are looking for upside, first price needs to reclaim this, but most of all it has to be this 265 level. This is the key level. Price, you can see, was too weak. We went up, we failed to hold it, and as soon as it came down, this was the place to manage risk. This is what I was talking about last week. We were close to breaking this, and what I was talking about is, if we do end up breaking it, this is the place to manage risk. So if no matter if you were bullish, this was very nice to be able to manage at key levels. So no matter how much of a drawdown there is, you have gotten out at a level which is key. So really, at a higher time frame, this is now the key level, guys, for bulls to really reclaim. And I would say that if we do end up reclaiming this 265 level again, that would mean that this has still just been a long and tiresome range, and the bulls are ready to be completely back in control. And more than that, what would happen is that it would open up again to basically not having much of a bear case left, guys, because there's big resistance right here, 257, and this monthly open 261. You would expect price to really, either it has to just impulse through it, or it's going to just find a lot of resistance. So once these key resistance levels are taken out and this big 265 level turns into support, this is pretty good. And apart from that, for the bears, you want to see price starting to close below this 245 and this 242 level. I would say once you do get this close, then you can start looking for the 225 level. 225 is pretty strong. Another thing I want to say is this uptrend, this downtrend, for now it is still decent. It's got higher highs on the DMIs, yet the DMIs are yet to break the 25 level. Even though the ADX is rising and ADX is now above the 25, but you also want the next expansion for the DMIs to move up. If you get that, there is a decent probability that this break of key support can take place. But for now, all prices done over the last 3 weeks has just slowly ambled down on declining volume into key support. And in my book, no matter what the momentum states, in my book, that is not entirely bearish. So you want the bears to prove themselves. They have to start upping that volume and break this key support level, and they can't for now. There is a key resistance. It's a very tight range, so you want bulls to start taking this key resistance level, and you can manage your risk from there. Quickly, I'll look at the 4-hour just to give you a clear picture of what has happened. So we have had a very clean stop run, so this was a nice stop run. And quickly on the daily, there was a daily block. It is much clearer on BTC, but yeah, this big daily block over here. So we've had that stop run, but what we've done is we haven't completely built a continuation out of it. For now, this is the 4-hour block. This was the one that was that was holding as support. You can see we broke below it, tested it as resistance, and now we are above it. So if we do end up still holding this, I would say that the bulls would still have some kind of a case, and there's something changing. But most of all, I mean, it is the US Open that we have to wait for today, in about 7 to 8 hours, in about 6 hours now. We have to wait for the US Open and see, because the indices as well are at key support, and that's the bigger market, guys. That's BTC is fully correlated right now to the indices. So you want price to be able to hold support over there as well if you are bullish. So for now, this is the key levels for total market cap. I would say the big bullish level is the 265 level. There is a couple of very key resistances, which is this VWAP along with that daily resistance level that I was talking about, and the monthly open. These two are here to provide big resistance, but once 265 is really taken out, I think it's going to be pretty good. And there's another block I want to just highlight for the 4 hour. So if you really want to tighten the range on a low time frame, I think what you want price to do is to break up above this and start finding support, because right now 4 hour, the market structure is still bearish. This is the 258 billion is the level that price needs to go above, and then possibly hold this bullish block over here. And once you do that, I mean, you have a place to manage your risk for upside if you're really looking at lower time frames. So for total market cap, a little more detailed review just to make you understand the big key levels that have yet to be taken out and what your bullish cases can be. But for now, since we have been in a downtrend, essentially a slow grind down over the last 3 weeks, all the momentum is against the bull. So you don't need to get in early, guys. You want to ride trends, you want to ride probability, so you can get in on this later once it starts to prove its strength, and it starts to buying support. You can still do it as a scalp trade and possibly take profits and then manage your risk, but you cannot really be looking at full size positions when the trend is against you. Even if you are hitting key support, you can take a position, but allow price to prove itself before you can really put your weight behind it. Altcoin market cap on the monthly time frame, essentially we just have today and tomorrow, so it's not so bad. I think looking at monthly charts at the middle of the month, and when there's a lot of time left, it's quite pointless. But a day or two before the end of the month, it is still okay. You get a bit of a feel for the bigger picture. And for now, you can see what price has done this month. Here's key monthly resistance, and here is the key monthly support for now. And all price has done is spent the entire month between it. So on the monthly time frame for the altcoin market cap, there is not much except just sitting within key monthly resistance and key monthly support. On the weekly time frame, we have this weekly block right here, which is quite in line with this 80 billion level. And spoke about this 80 billion level, just for the sake of this, I'm just going to remove that. Yeah, spoke about this 80 billion level. So price has yet to break below it, so that we can be looking for anything lower. The reaction from here has been decent, and all we've done is we have made a higher high last month, and we found resistance at a key level. Now we're building that retrace. So similar thing, guys. I'm not going to go into a detailed plan for the total market cap, the altcoin market cap, but it is a similar thing. We've had a couple of failed breakouts, yet we are still within the areas of support. So until price proves itself, you can play this as a range. For range play, just look for the key support areas. We have a video on range plays. I've been through it a couple of times in our weekly reviews, but we have it on YouTube, so you can watch that. There is, there is significant information there where you can be able to play this range until price keeps in this range. I don't think there is something exceptional that you need to be doing. Don't be oversized. Allow price to prove itself, like I was telling you, for the total market cap. So we have same thing. We have a potential SPF, but all momentum, everything is still against the bulls. So either the bears have to break key support levels, or this can just continue to reduce that volatility and continue to really play in that range. What happens when we are in a range, guys, is that when momentum is not there to really support price, then price is very free to just use the odds for itself. So if there's too many people who are going long, too many people shorting support, price can just end up chopping all these people up. So you have to understand that about ranges. Try to not be biased, and just play it. And most of all, try to not be oversized, because ranges are just for that. Price has done nothing, but I'm sure if people are still waiting for that big swing trade without having a setup for that, I think you're giving away quite a bit of your money if you're doing that. So while it is in a range, use sizes which are specific for ranges, and have levels which are specific for you to be able to take profit. On the 4-hour altcoin market cap, a bit cleaner. You can see this big support level that has just been tested as resistance. So you can watch this as well if it turns back into support. But for now, again, just the range, guys, and let it prove itself, really. So here we're looking at the quarterly chart for BTC, and you can see that this big quarterly block, it ended up holding no matter how big a wick we got. So this was very key, that quarter. And we have got a significant impulse out of this. You can see the size of this candle, and you can see the size of this candle. So this is quite impulsive. We have closed above the previous 2 quarters. We're going, unless in the next couple of days we are closing below 8200, which is right now looking quite a low probability. This is quite significantly bullish. And what we have seen is the last 3 quarters we have tried to take out this big level. Essentially this 10,700 is the big quarterly level, but this monthly level of 10,300, we've had 3 quarters where price has just been testing it. So what I would say is that yes, it's getting weaker, and yes, this becomes such a key level going forward. I think once price does end up breaking it, what would be very key for the market is to end up holding this as support. Eventually this is the level. Once it turns into support, guys, I think that is the real bullish case for BTC. Because you can see how significant, it's just a psychological level, but this 10,000 level, how significant over the last 3 quarters it has just turned into resistance. So again, looking less likely that this is going to be the quarter where we close above it, but nonetheless, what we have in relation to the previous 2 quarters, we have a strong candle that is closing above both of these. So that is looking bullish. Nonetheless, big resistance up here. Quick look at the monthly. On the monthly, I think there is a bit of a challenge for BTC, because this, I think 91.59, 91.60 level, I think price needs to close above that for the next couple of in the next couple of days, because if not, then it does logically open up to come and test this previous monthly open 8600 level. Quick glance at the weekly. again similar to the total market cap, but here it highlighted this big level for BTC on the weekly. What I would say is, if you look at these two big blocks for this weekly block right here, what I'll do is I'll just mark it out quickly. So this weekly block right here, yeah, and this weekly block right here. If we remove everything else, these are the two key levels for price right now. So this is what needs to be taken out to really prove this. This people are overly bearish right now. I understand that, but there is no logic to that sentiment. They need to take out this level for this to be whatever distribution it is that people are projecting. There's a lot of wick off distributions being shown. Then it needs to be proven. This is happening on a declining volume, guys. And for the upside, this is the big level. It's the quarterly level. You can see once, twice, thrice we have failed. I mean, there's big supply here, guys. Somebody's just been smashing price down each time. So this is essentially the range for crypto right now. This is the range for BTC. And I know a lot of technical analysts who are going to wait for price to get above this to get in, which also makes a lot of sense. But if you are trading every day, maybe you can trade this. This was not so friendly to trade, over at least the last month. Yes, there are some key levels. I will show you the chart that I've been using to trade. But outside of that, I know there will be a lot of analysts who will wait for price to get up above this, because then this becomes a very big base. In technical charting, when we call this is a very big base, this would become essentially more than a year of basing. Once price does break up above this, you would see a lot of money get behind it. So which makes a lot of logical sense. So if you're really even looking long term, rather than being stressed about what is happening here, you could in fact as well watch for a breakout of this base on decent volume and just get in, because that would signify what it is on a higher time frame. Another thing, just quickly a look at the volume on the daily time frame. So here you can see it pretty clearly. This is just declining volume all the way since the halving, since we have gotten into this range. This is just declining volume, guys. So I do not see, this is essentially what a consolidation looks like. There's another very interesting thing that I want to show you quickly, I think, on the weekly. This is to do with volume again, and why this key level is this 8100 level is what is essentially being defended. This is just again from a perspective of volume analysis. What you can see is that this rise we had, there's a lot of disbelief in this rise again, because it was declining volume. So we had this rise on declining volume until we got this impulse. This is what a breakout impulse is. This is all declining volume, and then we get this surge of big volume where price breaks up above this, and you can see what happened after that. So this is essentially the breakout candle, which broke out essentially from 7700. So we broke up above this on increasing volume, and you can see what happened after. We just found support, guys. This is the key candle on a weekly time frame, according to me, for BTC, this breakout candle. And for this is somebody who's decided that this is the consolidation and this is the breakout. So to maintain this bullish structure, essentially the breakout level of this breakout candle must not be taken out. And I mean, first, we are far away from that. I mean, but I just wanted to show you that this is how significant it is. We broke up on increasing volume, and since then we just found support above it. All this big selling during the halving, uh, somebody just this whoever did made this happen just absorbed everything. So if you, this is just for your analysis on volume. And key volume I did show you. Another thing I wanted to show you is the correlation. I mean, right now it's showing insignificant, but I mean it's just on the edge of it. But this is the correlation with BTC and SPX, and you can see each time there has been something big and impulsive, we had very high correlation. So right now it is just because it was the weekend, it does that. There is insignificant correlation, but the correlation is still significant, and the SPY should be watched, guys, essentially. And quickly I want to show you, this is the levels on BTC for this range that I have been trading and I've been using. And there's a big channel up here, this key monthly level, and this is the daily block which is in confluence with the middle of this channel. So we've got some pretty decent reactions here, and you can see what happened each time we came down into this block and we broke up above this. If we hold this level as support, there is a decent place over here to be managing risk and watching for upside. So you can see we broke down below this and we are holding this as support. The only problem right now over here and the conflict is that we have not made a higher high, so the break in market structure is not yet here. So this is not a conclusive place to be looking for that upside. You at least want the break in market structure on the 4-hour time frame to start supporting that case for reversal. So for that, what I would say, and this is what I did post in the Discord, is this 4-hour block right here. So if this 4-hour block, so if we can make a higher high over here and then hold this as support, then we have a break in market structure and the reclaim of a key block. This could be a place you could end up managing risk, and you would have a confirmed break in market structure. Until then, we are making lower lows, even on a daily time frame, on a closing basis, and otherwise we have been making lower lows and lower highs. So do keep that in mind. So this is for now on a lower time frame. This is for if you're looking for upside, this is the game plan for the bulls. Otherwise, for the bears, this is again what I highlighted as a key place to be managing risk. For downside, we also have, I'm just going to go back to where we have more levels. We also have this monthly open, which would be a nice place to manage risk if you do end up getting a rejection there. I'm just going to quickly pull out a fib. It should be the 6. Yeah, so this has very nice confluence, guys. You'd expect a very strong reaction from here. So if you are looking for downside, this is again a level that can give big resistance. So for BTC, I think this is the level that needs to turn into support to really support that we that price plans to go higher, and bulls are the ones that are in control. And a key VWAP, this is what BTC has been holding up. You can see how important VWAPs can be, and how price is still, we have not got any daily closes below this VWAP. So what I would say is, if price does end up coming down here and this key daily block, you see price closing into it, you see a daily close below this. Yes, 8600 is the big level still, but I would say that this is quite significant, guys. So nice place to be managing risk. For upside, I showed you on the 4-hour, and for you to know where bulls really end up having control is this big monthly open. You need to find support above this. So you have levels for total market cap for BTC, which are significant in either direction. And for now, again, nothing is proven, guys. Allow the range to prove itself. Volatility is really at incredible levels. Just quickly, I want to look at the volatility. You can see the volatility over here on the daily time frame. uh, Quickly, let me just highlight the other couple of places that we've had this. Here we had this in September, such a big move from here. We had this in March and April. Again, it was such a giant move outside of this. And then, very importantly, we had it over here, in October and November. And what you want to see here is, that this continued to be like this for another couple of months. So, we have been anticipating a move. But if you look at this, you just need to find these key levels, guys. If 8600 is the key level, you can wait for price to break below it and you'll get that big expansion. But until then, trading this was really not pretty at all you needed to do was set alerts at some key levels. But this low volatility, when price gets into that, this big compression, it can stay in that for as long as it needs to. Look at how many times the support got tested. Somebody says, oh, 3 times or 4 times the support gets tested, it gets weak. But support got tested for 4 months, 5 months. So until it prove itself, it was still support. So you need to know that. And for now, this is the level. This is the support level that's getting tested. This is the resistance level that's getting tested. It has gotten tested thrice. This support is getting tested again and again. Over the last 3 weeks, there is decent pressure from the bears trying to test this 8600 level, trying to break below it, but it is not yet proven. So this is a good template for you to understand that the range can get tight. There can be a range, but until it proves itself, you do not need to throw your weight behind it. So again, very significant in terms of perspective. Here's a quick look at Dow Gold. We highlighted this in the Discord, and this was a key support level. We ended up closing the candle above it, retesting it and expanding. So currently we are finding support at this daily block right here. But nonetheless, this is a head and shoulders, guys, which has been tested and price is broken below it. Not a very bullish pattern, and what bulls really need to do is reclaim this. Dow Gold, it's a good risk on, risk off indicator. We have low highs and lower lows over here. So for now, in terms of market structure, this does look like it has been pretty strongly corrective. And what price needs to do is either stabilize and show us what it has to. But because the downtrend has been essentially since the 9th of June, we've had this strong selling going on, which, because BTC has had that correlation, you can see that it is reflecting also in the crypto charts. So I would say, for a lookout at this ratio, this is the key level. It was resistance below before it turned into support, and now we have broken back down. So if you really want to be looking for a potential of a risk on environment, you need this level to be reclaimed again. So looking at the SPX right here, and what I want to highlight is some key levels. We're at a very key level of support. These are the 50, 100 and 200 EMAs. You can see how big a role they play, on this chart. And you look at the 200 EMA and how it has worked in the past so far. But not only that, but in terms of horizontal levels, this level that I've been highlighting, it's this 2950 level. You can see it was big resistance, before. Once it turned into support and confirmed as support, we made a huge rally from this level. So I think it's more a little bit like a zone, but this is a very key zone, which has certain confluence with these EMAs. So I think this is a key level, just like the 8600 level for BTC. This is the level for the SPX, and this is the level that needs to hold. Below this we do have some levels, but if you're really looking for a strong level, horizontally, which has acted as good support, it is all the way down here. It's at 2600. So this is a very key level, and this is essentially a big place for price to end up finding support and holding if the market has to do what it does. I did show you a couple of analogs and blueprints in the last review. If you did not see it, you should. I think those are very significant, and I would share a couple of statistics later in the video to do with that, but do watch that just to understand what potentially price can do if this level ends up holding. So very, very key level, and a nice place to be watching for price. So this is why I wanted to tell you to go watch the last video to look at the analogs, because this is outside of what we have right now. This is what what the past performance for the best last 65, basically 3 months on the S&P 500. And currently we printed about a 36.5%. So we are third on this list now. So it is very significant to be third on this list. These are all major market bottoms, and the analog that I am talking about, it has a comparison to what price is doing now to the last 3 times that price has done something like this. Of course, past performance is not something that always proves future results, but you do have certain kind of similarities that you look for to find some kind of an edge. So what I would say is that support level I highlighted on the SPY, if that can hold, then it is probable that we are doing something which is similar to these, because it did after the first big impulse which we've had. In all of them, price did at least go sideways or make another wave up before really just consolidating. Because what you have to understand what the funds are doing, guys. The funds, what I showed you in the previous review was so many of them were moving into cash. A lot of older people, a lot of big money had moved into cash. So what they're using is a lot of these metrics to tell them whether price has bottomed out or not, and a lot of these metrics are pointing to that. So they are going to be making a calculated guess and finding calculated places to manage risk to potentially get back in. But what you need to know is the next 20 days have generally been kind of negative or sideways, but eventually you can see that we've had very good performance. 2 months later, it's again positive performance. This is 4 months later, again very positive performance. I think this is about 8 months later, and we don't have too many negatives over here. So it is the next 20 days, and I would say this is the phase that we are in right now. So you can expect more chop, but look for the key levels which can give you some place to manage risk. Even to play that chop, you can be playing stronger names. I did give you a strategy for lockdown and non-lockdown stocks. You can see many of them are doing well still, as places in the US are getting more cases. These stocks are doing well, like Zoom, Shopify, but you have good trends. You have good trends in biotech, so you still have good trends for the upside. But you have names which were weak earlier, like the financials, which are still getting weaker. So you have, in this kind of chop, ways to be playing the market in both directions. But again, until price proves itself, looking for swing trades in this kind of a scenario may not be so prudent. So very significant statistics, guys, and something to understand and employ into your strategy when you are looking at what must be happening. So this is what we've had, 36.3 in the last 65 trading days. So this is pretty good, and again, it is a metric that has supported that it could be potentially a long-term bottom, but there is never guarantees. Watch for those key levels on the SPY, and let's see what the next week brings us. Need to keep a very close eye on the dollar. You can see how significantly negative the correlation is. It is very significantly negative. So we've built quite a decent looking structure here. I would say if price does end up breaking above this, you could see a stronger risk off environment, because the dollar's really been driving the markets, and we had a good run while the dollar has been in a downtrend. And since the markets have had this slow bleed, the dollar has been stabilizing all of this month. So it's a range, and if he breaks up above this, I would say we'd get significant risk off in everything, including crypto and your traditional markets. So very important to keep an eye on the dollar over the next couple of weeks, because the correlation is very significantly negative right now. Quick look at oil. We have a divergence wherein now the RSI has gone below the 60 level. Possibly it could head towards what significantly has been support close to the 34 to 35 level, but price needs to break down. Looking at key resistance over here, you can see it's a very significant resistance level that we are getting a reaction with a divergence of this 34 level. Historically, you can see we built quite a big move off of it. So this is still significant, and if price does not end up holding this, then the next big level for oil is this 27 and a half level. And after the kind of move and what we've done, I think this would be very interesting if price does end up getting here, and when price does. But these are the key levels to look out for, and this is where you can end up managing your trade. Essentially, if you are still looking for this continuation, you could manage your risk off of these highs and target first of all the lows over here, and then the 34 and a half lows right here. On a break of this, you can manage your risk from here to this 27 level. So this is the significant levels on oil, but nonetheless decent big divergence on big resistance always ends up giving you some kind of a reaction. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!